What's up? What's up, everyone? Yeah. Well, good morning, everyone. So, you guys gonna be on your own for a couple of weeks? I have a business trip, setting up a new fund in Switzerland. So, gonna be busy there. One second. Let me just finish all the bullshit. All right. Okie dokie. I'm gonna for those who joined early, I'm gonna give you something different. So, Alibaba got a contract from Apple to do the AI ChatGTP style AI for Siri, okay, and that's going to be a huge contract. So, this is a weekly chart of Alibaba. It's pretty much trading where before it went public, not before, but around, and this is what followed. It can easily triple, double, and quadruple from here. So it's very depressed. So if you have a few shekels, not a lot, but this is a long-term play, obviously. But this can easily go. This can easily double. Okay, just FYI. If you want to fuck around with some stocks, that would be a good play. Another good play is Intel, AMD, and Intel. Intel, by the dip. It's pumping on the news that because of the Trump, the chip manufacturing will be returned to United States, or done more so in United States, not just be dependent on Taiwan and the TMSC. And so basically, the rumor is that this will be. That's why it's pumping, basically, so that the Intel will be utilized for those purposes as a strategic asset in United States. So again, right now it's at 26 pre-market. I would put a few shekels in there as well, okay? Because it can easily go. Well, the heydays were at almost $70, right? We are at 26, so it can, let's say it goes to 50 right here. You can easily make again, if you have some kind of investment portfolio, blah blah blah. This is not an advice and all that, fuck you, but if you have a few, if you want to do some stocks, these will be my kind of suggestions. How about that? So I don't get lawsuits up my ass afterwards for no reason. But yeah, I'm invested myself, so just if I wanted to share it. So about JetBlue, but okay. All right. So today is the last day of lives for the next 2 weeks. I'm going to be traveling, but hopefully you've listened enough to put some of the concepts to use, because nothing like when I'm the training wheels on your bicycle right now. Once the wheels are off and you have to make those decisions yourself, instead of me chewing through it and putting in my biases and my views on it, you'll have to do it on your own. And that's a good thing, because in 2 weeks when I return, you guys will be able to see what worked, what didn't work, what mistakes you've made. And for the next 2 weeks, do yourself a favor, journal every single trade journal, because in 2 weeks you're gonna have enough data to see which trades were shit, which trades were good, and what to take and what not to take, what to do more of, what to do less of, and just use it as a some kind of training period. Okay, 2 weeks of diet, or 2 weeks of something that you don't want to do but you do, is not a long time. Okay, so for the next 2 weeks, it's a doable commitment, and obviously you have to journal. It's like brushing teeth. Journaling for me now is brushing teeth. Okay, I went through periods where I didn't journal my trades, and by journal I don't mean write your. I had whatever shit for breakfast, and I had a tear in my eye when I remembered something. No, no, not of this. This is not a Girl Scout uh, bullshit journaling. So the word journaling has that connotation for me at least. But no, you have to you have to take before and after pictures of all your trades. You have to obviously outline the outcome of the trade, whether you lost, you broke even, you won. Did you wait till target or did you close it sooner? And then your criteria for entering and closing the trade. Okay, what kind of setup it was, why'd you enter it, and then your thoughts. And once you have 50, 60, 100 entries, I can guarantee you will see patterns. You will notice shit that doesn't work. You thought, oh my God, I thought this was working, and this shit ain't working. And also you will see stuff that clicks. Oh, so your brain will automatic, and then you make adjustments towards that. That's everybody has to have data. Athletes, any business, right? You have to have data in order for you to know where the fuck you are and what course corrections you have to make along the journey. So every time I had years back, I stopped journaling because I thought my shit don't stink. And then I restarted journaling. My trading improved immediately. Okay, and then that's after a decade plus of trading when I stopped. Okay, I stopped journaling, and then I didn't journal for like 5 years, and then I restarted journaling, and even even then you immediately improve. So it's now for me it's like brushing teeth, it's just automatic. And like I tell you every time you journal, because you have to put in an entry, you have to, let's say let's go into gold. By the way, how about that gold? How about that buying the dip? Anyway, um, right now we're at top of the range. If we take out these lows, you might want to trade the range, even though it's still high risk. Okay, but buying the dips would probably be an easier play to do. Anyway, let's say you wanna let's hypothetically speaking, you see a price action do this today, boom, 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 okay, and the price breaks down, retests, and then you see a nice candle with a body, with the inverted hammer type of candle, and you sell with a stop above, right? And then you target 1 to 1, 1 to 2, whatever the fuck you do. So that's the setup. This is what you journal. You take the picture of before, when you're just entering the trade, and then when the trade is done, you take the picture and you see, okay. And what's going to happen is sometimes these trades obviously will not work out the way you think they will work out, and you will have plenty of trades before and after pictures for those who are very visual people. And again, you can use Excel to have detailed data, but for me, the setup of the picture will be even more so visible. So, and in Excel, you can't really attach a picture so it's visible right away because. So I tend to journal in my Notes app on Mac. I'm sure Windows. Everybody has Notes app, right? And it's easier for me to see because every trade I immediately see before and after picture. Okay, all right. Because my expectations were this, but what it did was this, okay? And then you're gonna take 10 of these trades and say, okay, well, this was kind of trend in a long-term trend, so maybe I shouldn't take range trades when strong trend up, okay? Maybe this is after 20 trades like this, you're like, okay, this is definitely not a good trade setup. What's a better setup is to wait for the bottom here because my risk is pretty clear, and I wait for a candle to close, not just wick, but close below to, to be stopped out, or more likely, it keeps trading in the range. The reason why you want to wait for candle to close, because so you don't end up being a fucking roadkill by market makers, as it's super evident here on daily chart of um, fucking Bitcoin. Jesus Christ. So this was the previous all-time high here, right? People were selling at previous all-time high, but their stop losses were where? Above all-time high. So the market makers popped and dropped. Okay, they took profit, they stopped you out. Not you, but other big players. Same thing was done here. These were the equal lows, right? People, or let's say you were even smarter. You didn't put your stop losses here. You started buying. You bought here thinking you're gonna go all the way up here again, and first before it went here, it wicked you out, stopped you out, and then it went. You're like, motherfucker, right? It wicked me out, and then it went. How many times did it happen? So wait for candles to close, and this is what I like to see, because then you know that if a candle closes, there's a higher probability you're gonna have a follow through. This wasn't just market manipulation. And again, market manipulation doesn't mean your broker is manipulating you. It has nothing to do with you at all. You're irrelevant with your $1,000 or $1,000,000. Completely irrelevant. This is happening to other big boys, okay, who also put their stop losses there. There's a liquidity pockets essentially that even bigger boys try to push and grab, and then it reverses. So it's market manipulation on an institutional level, not just oh my God, my broker did this. It's not a broker; it's everybody. Okay, so you don't end up like a roadkill unnecessarily. So I like to see. I usually wait for candles to close before I take my stop loss. So I don't leave an order for a stop loss. I'll leave an alert. However, you have to have the discipline to close the fucking trade when it goes. So because sometimes what happens is it wicks and it keeps going. So and it closes super even lower than you should have let's say it closes right here. So you have potentially higher losses. Possible higher losses you can incur higher losses this way as well, but you're not going to be stopped out as often. So again, this is where the journaling comes in. Do you prefer this method or that method? And the only way for you to know is to take 100 trades of this way, or 50 trades of this way, and 50 stop losses of this way, and you see which ones are working out better. Okay, that's especially in markets like this. You also can make adjustments, right? So, for example, when this is chopping about for 6 months, like it chopped about here for 6 months, when it pops finally, one way or another, you know that the probability that it might be starting to run. So you're not going to be waiting around. You might have a hard stop loss instead, right? So you can play around, given the context of the situation. All right, we just had a cash market open. Let's see. S&P down, well, it's flat. Flat. Dow flat. Yeah, that's bullshit. So let's see gold. Gold is one. Yeah, so cash popped all-time cash spot. Did an all-time high with a little breakout. So we can, again, this is not, I wouldn't short this at all. It's very hard to buy here, though, because your all-time high, you have all these momentum is waiting indicators, right? So this is all, and it's been, but this is, by the way, this is why in a strong trending market, I don't usually use the divergence. Divergence is a nice one. It's like a slow market. This is a very strong trend. And you can see this is RSI, right? You have divergence after divergence after divergence after divergence, but the prices keep going up, 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 right? So if you're gonna be watching divergences, you're gonna be shitting you're basically gonna stop yourself from entering trades because you think this is the top. Oh, there's a divergence. This is the top. These are two, right? And then okay, I'm shorting, and then it goes up. And okay, there's another divergence. So you're never gonna go long because you will be afraid to go long into the divergence. And it went from 2,500 to almost 3,000. So 500 points in gold, which is huge. $500 worth of $500 went upward move in gold. You're gonna miss because you're too busy watching divergences. Okay. So yes, it is hard to buy here. So what? So then don't fucking buy here. I'm not gonna buy here. I'm gonna wait for this. It's gonna do this one. It might do this and then this and then that. Okay, so I'm just gonna buy the retest of some levels. So it breaks out, retest, continuation. Breakout, retest, continuation is a sure way to is a conservative way of entering a trending market. All right. So you trend. So again, if there's nothing to do, there's nothing to do. And for me, this is nothing to do. I don't want to short here because it can just easily pop. Okay, it's not. It's making what higher highs, higher lows, right? Low high, low high, low high. The short-term 1 hour trend is still up. It hasn't taken out this low, and even then, I wouldn't put too much. And by the way, look, this was the real low. Up, we broke down, we retested it, and we went to another leg up. So yeah, you can scalp counter trend on a 15-minute or from 1 hour to 15-minute, kind of like you did right here, right? You always have the breakout, retest, continuation. This is a very conservative way of entering, but you have to be patient. And most of you are not patient, so you're gonna be like, oh, okay, I'm gonna short right now, and then you're gonna get stepped out. You're flipping a coin essentially instead of trading. All right, and I don't want to flip a coin. I'm just going to be patient enough. You can see that this is a very trending market that supports this 55 EMA, right? Every single time there is here, it gets to it. So the 55 EMA is right here right now. So why, instead of me trying to do something, short here with a stop here, and then it just pops and then drops, instead of doing all that bullshit, I'm just gonna save myself the fucking my nerves and my mental well-being, and wait for the price to come back to this average price. Okay, this is a value area. This is why the moving averages are used, because that's average of pricing through a period where that's a good value area to go to purchase the price. I mean, to get long in the uptrend. In the downtrend, it's reverse. It's wood. Okay, so I'm just gonna have to be patient. It might not happen today. It might happen in a day or two, but when it does, you do that. And just like we did right here on Friday, right? This was Friday. The drop. Then I rode it up. I didn't catch this last move up, obviously, but that's okay. I've explained to you why I took profit where I took profit yesterday, and now I'm just gonna wait for this. That's my big why. Well, because it's been doing this shit. Why am I gonna reinvent the wheel? It's been working fabulously for the last month and a half. So just follow the script for now until the script changes, and the script hasn't been changing in a long while. Okay, so for a month we've been essentially the uptrend started in 2024 in December. So for 2 months, almost 3 months now, we're just doing this. So stop shorting, just wait for the dip, at the value area, whether you're using value area with the horizontal support or a moving average dynamic area of support, meaning the moving average, or use order blocks, smart money concepts, or you make a reading in coffee grounds and look at the moon. It doesn't really matter, right? Whatever works, whatever system you use, just as long as you get the direction right, usually you will be okay. Okay, and the direction is where it's up. So just wait for this, and this is where you. This is why right now I'm not gonna be shorting this, even though it's all-time high. You can, small risk, and the market's overbought, and there's divergences and this and that. But people were thinking about that every single time it made a new time high, and they all got slaughtered essentially. So if you want to be try, again, I'm not saying you shouldn't do it, but if you want to, but again, I personally don't. I can be patient enough. I made it. I had zero headache, zero losers in the last month. Okay, not a single loser. Why? Well, because I was just buying the fucking dip, and I didn't have to figure out and fight the market and go kind of trend and oh, this is a head and shoulders, and are we gonna go down? And no, just buy the dip in a strong trending market, and it's easy and effortless. Not effortless, like completely effortless, but it's a lot easier than fighting and trying to pick the top every single time. And I think I've been mentioning pick the top every single time. I'm just reading thoughts in euro, dollar yen. Good call. Yeah. All right. So with gold, I think I've blasted it ad nauseum. Wait for the value area. You can be here. You see that's the previous order block area, right? So, and this is also where the ATR daily ATR is today. So if we get this, that's probably a good area to, and then starting to turn around, you buy the turnaround, okay? You have a nice candle with a wick like this, right? Then we take out the candle high, your stop loss is here, you're targeting these highs here. So 1-to-1 is right there, okay? No brainer. That's a A+ setup because it's been working. It literally, that's what I've been just taking for the last month and a half. Just same fucking thing. Same fucking thing. Look, it always gives you these fucking wick candles. Look, right? There's always a turnaround candle. Always a turnaround candle, Most of the time. Let's put it that way. Most of the time, you're going to see a turnaround candle that's giving you a clue. Okay, we have bottomed. We have bottomed. Buyers are stepping in. We tried to take it down, but it reversed. That's why this candle right here is saying that at some point this candle looked fully bearish, like it's like we're gonna go down all the way up here, and all of a sudden buyers step in at the previous order block right here, or previous support, or whatever the fuck you want to call it. Oops. Shit. 1 second. There we go. Come back. So we have the buyers basically overpower the sellers, and then short covering has to start. So people who were short from here, they're holding their position, and this is running, and then they see this candle turn around, so they start shitting their pants, and they're saying, okay, I gotta get out because looks like this counter trend move might be over. And so they start closing their shorts. All right. And then on top of that, new longs are piling on at the same time, right? Because they see that this is a turnaround. The trend is up. So this is a good time to enter. So this is why you get these setups all the fucking time, all the fucking time right here. Okay. It gives you enough. The setup itself happens enough times for you to take for you to make money. Okay, so just wait for the same similar setup at the area of interest, and until then you do nothing. You sit on your hands and you go have some coffee. You go for a walk. You go to the gym. You breathe some air. You meditate. You do whatever the fuck you want to do. Or go if you have a normal job. This is how you trade, and you have a normal job. You mark the areas of interest, and then you leave alerts. You just leave an alert right like this, add alert, blah, blah, blah. When the price gets to this point, this is the area of interest. You mark it on your chart so you don't forget because you're looking at 20 different charts, let's say, right? So this is an order block. This is a previous ATR. This is this, that, okay? and when the price gets to it, then you turn on, you go on a shorter time frame. You watch for the turnaround. You watch for candle close turnaround, and the setup to give you, well, setup to setup, and just execute your trade. That's it. Okay. All right. Let's take a look. I'll go through all the majors. So we always start weekly, daily, something like that, right? So daily. Daily euro is a little. I don't think there is a trending. It might be trying to put a bottom in. So I'd be interesting to buy around these levels, even though the trend is down. But this is the first time we were making lower lows, lower highs here. Then we've tried to we've took out the previous resistance. So we had a shift in market structure, right? Then they tried to take it down, but we couldn't take out this low, right? So now you have a higher low. You have a low, a higher low, a high. You don't have a higher high yet. So conservative trade would be to buy right around these levels here. There's a daily chart, obviously, but so it might take a while to get there. Well, you buy around support area because your risk is pretty fine. Okay, you just that's the risk, and the upside is asymmetrical. You can also, if on an intraday basis, these are becoming an area. This is breakout, retest, and continuation. So this is also an area where you can nibble, start a smaller position. This is a higher probability. This is a lower probability. But right now, they're trying to take out this high. Okay, so when in a contracting volume. So let's see if that happens. Let's drill down a little bit. So obviously we're making lower lows, lower highs on the hourlies. So there's nothing to buy yet. Okay, because it can keep going and going and going until wait for the short-term market structure shift. Okay, so the daily areas we'll mark it right here. I like the candle close. Oops. Let's do this. Okay, so that's the daily area of interest for us, right? So let's see what happens around this area. We can dwindle down, and then let's say the price, does this, and then all of a sudden it takes out this high right here, right? It retests, and you're thinking that it's gonna do this. So when you see that a retest of that it took out previous swing and there's a shift in market structure, you buy right here, so that would be the trade. Again, that might take 2-3 days or a day to play out. Okay, so or you're gonna flip the coin and buy like a retard and then hope for the best, right? So not a good way of trading, is it? You also have to look at correlated market. So euro is going down, pound is stable, Aussie is stable-ish. Aussie is stable, right? Consolidating at the previous. So there is definitely room to go to even retest this breakdown point. This was a strong downtrend. What we can do is we definitely want to put some fibs on this and just see where the first stop is usually the 38.2. And looky here, 38.2 coincides with a breakdown. So if you were long from somewhere here for some reason you were buying, this is going to be the first area where people will start taking profit. All right. So if you want to buy now and you got all this room to go, your stop loss should be all the way up here. There's not enough room risk the reward for you to execute something like that. That's not or at least stop loss here. It's still you basically you're right at the wall, and there's all the way back. There's all that room for you to be pushed. Okay, so there's no point. Wait for the dip, then buy. But we took out the we were making lower low, lower highs, right? This is the low. This is the previous high. We took out that high. So let it put it a higher low. And if you're gonna start seeing this, that means that short-term trend has changed, and then you can start buying. Okay. Yeah, dollar yen. Nice deep pullback, by the way. So that's why we have fibs, right? So you had fib from here to here. We went to 786, turn around. There was a first initial wave, then a turnaround, then another deep pullback, and then another turnaround. So it looks like we don't need this anymore. This is done. By the way, intraday, that's weekly. 1 second. Show you something. Here's it daily. If you would have just, so this is trend up on the daily, right? Look. Again, between this 618 786 reaction. Okay, enough for you to make money. So that's why I like these deep fib pullbacks into it's called the banker's trade. Between 618 and 786, it's a good value area to buy because your stop is pretty fine. So right now, I don't know. It's hard to read for me right now. We've had this. We've had the pump, and we're now dwindling down. So I think we can potentially take out this low, or at least approach it. So, and again, this is a 1, 2, 3, 4, 5 Elliott wave count. This wave is done. So this is wave 1. So then you do a deeper pullback of the whole wave. So if I would be looking to buy, I would be looking to buy right here at dollar yen. All right. And I would just leave. And then you go through all these pairs like that. And you mark these areas of interest. And when they get to it, you take the trade. And you have enough stuff to play around, you know. And that's on the bigger daily levels. You can do it obviously on shorter time frames as well. All right. How do you set up moving average? Well, the moving averages go to indicators, and the moving averages that I like are 55 EMA. I like 21 EMA and 8 EMA. So depending on the time frame, and this is a 200 daily. 200 daily is like an ancient moving average that all the old school traders still watch, and there's usually a value area around it, and there are some reactions usually occur. So it's just there for as a legacy type of thing, right? So as you can see. Anyway, these are the moving averages. I don't have to trade them ad nauseum, but when the strong trending market, you can see that it provides nice pockets until it doesn't, but then it resumes. You have to know how to. There's a whole system of how to utilize them. 1 second. There's obviously the whole. It could be a master class you could give on how to use moving averages. I started with moving averages a long time ago, so I still have them on my chart. I don't really use them. I just have them on my chart. If you want to have one moving average, 55 EMA is probably more than enough, like this red line here. Okay, on a 4-hour time frame, it shows you that when the market is trending, Every time it was approaching the area, it was a buy signal. Okay. So, but you don't need to. You can utilize horizontal lines of support resistance. You can utilize smart money concepts. It's the same shit. Yeah, that's TOS platform is well. This is Thinkorswim from Thinkorswim. This is book map just showing you where the orders are sitting on the for gold or any other futures, because futures the beauty about futures versus um, futures markets are all traded on the centralized exchange. So we all see the orders and we all see the volume, unlike in forex markets where it's decentralized and it's not a true volume, and the prices will be different depending who is your liquidity provider. Okay, that's why there's markups on by brokers. There, this, that, blah blah blah. Futures are a little cleaner because they're more regulated, more oversight, and all that jazz. And you can see what everybody else sees. These are orders, order book, and where major orders are sitting. I mean, you don't really, do you need it? Not really. You can. I know that above this fucking level, there's plenty of, these are the stop loss levels. Okay, you don't need to be a genius, but this helps if you want to. If you are especially doing like short-term trading, why not? So oil is a completely different animal. Certain things like nat gas, oil, are thing. I don't trade oil often. I take a peek at what's happening when it's like really, really, really good setup. That's when I trade oil. But oil, nat gas, energies are usually, you have to be a pro, specifically in those markets, because you have your own cycles of news releases, and Saudi Arabia comes up and says some shit and da 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 da. So you have to follow it, not to get caught in a bad situation. Okay. So I usually stay away unless there's some kind of like like here it was. This is a trend line, blah blah blah. We approach the area, and then I have an alert, and I can, okay, are we turning around? We might be turning around this resistance level. Here it didn't obviously work out, right? So I just, but yeah, with oil, I would just stay away unless you know, unless you watch it constantly and you are a pro following all the fundamentals in the oil, because OPEC comes out, says something, and throws a monkey wrench into your trade. Trump came in. This was oil rallying until Trump came in here and said, "I want oil lower." Okay, and the lower and oil went lower just because Trump said it. There's no technical reason for it. There was a breakout. This was a bullish breakout, and you think, "Oh boy, higher high." So a good example actually with the Trump talking. High, lows, higher high, right? So we are essentially, this is a shift in market structure. And you're like, oh boy. So we had a breakout, a retest, and a continuation. This is going to run. And then Trump comes out and says, I want oil lower. And it goes like that. And then what? All your technical shit just went to shit because some fucking person came out, not some fucking person, but usually presidents don't comment on oil that much, but in this particular instance, somebody came out and just said something which completely reversed the whole technical side, because nobody wants to piss against the United States and what they expect, they want. So Saudis and OPEC gladly obliged for now. All right. So you have to follow all these things. You have to know that Trump said this, or OPEC said that, or Saudi said that, or Russians said that, or blah 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 blah, right? And that gas is even crazier. So forget that. All right. Um, let's see what dollar is doing. Yeah, wow, this played out perfectly. I basically this was my um, how we've after consolidation we've put a higher low here and well here after this one, and then this was a end of wave four, and we put in a higher low here, and I this was here when this price just did this. And I basically said that this was probably the bottom, a fractal of this previous situation here, and we're going up. And this was obviously I didn't know. That's why I had this. But yeah, this is a weekly chart, so this was done weeks, well, a while back. Yeah, 6 months ago, something like that. So the dollar now is doing what? It's retesting breakouts, or let's put it here. Retest come up, retest. So we'll see if these areas hold and we have another leg up, or we take out the slow. If we take out the slow, then the dollar is probably going to start dwindling down. But for now, it's still in a bullish uptrend. So until we take out this level right here, that's going to be a major weekly level of to be taken out. So until that, we're still kind of, not still kind of, but bullishly biased. All right, a little bit at least. All right. So yeah, let's take a look at Nas and all that. Well, Nas and all the stocks are just pushing all-time highs. Okay, it's because basically I've been, again, you have to understand the fundamentals. This is purely fundamental play here, because if Trump gets his way, they deregulate, they improve the economy, companies will make more money. Thus, stocks will are pricing good economy in, and they're going up. On the other hand, if economy goes to shit, Fed will step in and cut interest rates to stimulate it. So stocks are going up. So they're going up or going up, and this is what's happening. Unless we have some kind of huge crash or some huge catalyst for this to turn around, so far it just keeps on trucking, right? This is a weekly chart. This was COVID, and we've been, obviously it's overbought like a motherfucker, right? But it keeps on trucking, keeps on trucking. So again, don't buy here. You know, don't be an idiot. Buy the dips, okay? On the hourly time frames, look at the areas of interest. So obviously, this is a good area of interest. This is a good area of interest, et cetera, et cetera, et cetera. So don't sell it because you don't know another. This is in a strong trending. Obviously, this is a lot choppier than gold. Gold is a lot cleaner. So this is an easy market. That's why I've been saying just trade gold for now. It's been nothing but in every market cycle there's always a few instruments that just keep on performing. That's why we hear maybe on the news the Fab 7, the FANGs, all these acronyms for certain stocks that are just riding and trading the whole market, right? So it just don't make your life just because you like to trade dollar or bonds or nat gas and there's an easy instrument. Just trade the easy instrument until it becomes difficult, because I've shown you before, it had its difficult moments where it was doing this shit until it started to trend again. So trend is your friend. It's easy. Just it's a no-brainer. It's a lot easier way. It's an easier way of making money. Okay. So yeah. So for now, obviously, this is not easy. Well, what the fuck is this, right? This is not easy. Okay. So you have up. I mean, a huge down day, then an up, then a down, then a reversal. But with a little, it went up, but didn't take out these highs. Now it's rolling over. This is a lot harder to trade. So if it's this fucking hard to trade, don't trade it. Stay the fuck out. All right, until it starts trending again, and it will start trending easily again. You know. Well, let's go on there for. See, when it will give you opportunities to trend again. You know, once it does starts doing that, you will see. That's when you want to trade it, not when it's becomes a fucking chop mess 3,000, and you know you have to wreck your head in, and it's again this is Dow, right? So you have a contracting volume, you have essentially a triangle formation here. So when it's when it's contracting triangle and we are at the apex of the whole fucking situation, wait for a breakout. This is not a time to be up. This is not a time to trade, especially not in this space. Maybe here you can trade extremes, but now volume is contracting. It's like a spring that gets coiled, 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 and then the release of energy occurs. And that's the spring right now. It's coiling, 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 and then bam, you're gonna get this or you're gonna get that. And you're gonna have it's gonna be a very violent and it's gonna be a powerful move. Okay, so if you misread it, if you're on the wrong side, you're just gonna get stopped out. Okay, so there's no point. This is not a good area to trade. Not a good area to trade at all. So stay the fuck out. Again, you don't get opportunities every single second on higher time frames, especially. You cherry pick the ones that make sense, that are easy to trade, and that's that. You know. All right. Um, all right, boys and girls. I'm a little tired and I have other things to do. Breakout, retest, continuation, and for the next 2 3 weeks, journal. I promise you, it will do you wonders. Um, I wish you all the great rest of the month, and I'll see you when I come back for my business trip, March 4th, 5th, something like that, and we'll reconnect. All right. Wish you all success, lots of profits, and I'll see you later.